good morning, everyone, and welcome to the November meeting of the Mississippi Mortgage Bankers Association. Today, not only are we having our regular monthly meeting, but today we'll also be having our annual meeting. So we have a lot of information to get to in the next little bit, but it's going to be fun, it's going to be informative, and we have door prizes, which is always a benefit to anything that we do. I first would like to welcome today's speaker sponsor. I think he needs no introduction, but Mr. David Stevens with Acronet. David, thank you for being a sponsor for today's event. We really appreciate it, and I'm going to turn it over to you.
Well, thank you, Matt. I appreciate that, and good morning to everyone. First and foremost, I would like to simply say thank you to the association for putting this annual meeting together. I think I can easily speak for all of us when I say that we would much rather be having this meeting on the coast or even in Memphis instead of our offices in front of a computer. But it's the times we live in, and hopefully that time will come sooner than later when we can all be back together in person. Acronet has always been proud to be a supporter of the Mississippi Mortgage Bankers Association. Our roots run deep in Mississippi since 1926 as a third-generation family business located in Meridian. We provide credit and other information-related services to the mortgage industry. One specific product I would like to just touch on from a credit-related standpoint would be our single bureau auto upgrade report. This is a product that, based on set parameters in our system, when the single bureau report is ordered, our system will either return just the single bureau report or the full tri-merge report. The idea behind this product is to help control credit report costs on the front end of a pre-qual application and to also help determine a borrower's creditworthiness. As we prepare to move into a new year, our staff's combined experience of over 100 years will continue to focus on providing customer-driven solutions and excellence in customer service. Harriet McWilliams or myself would welcome the opportunity to talk with you about all we have to offer and put our experience to work for you. Before I introduce today's speaker, I would like to touch on one subject to make everyone aware of regarding credit reports. As a result of COVID-19, Equifax, TransUnion, and Experian are offering free weekly credit reports to anyone through the annualcreditreport.com website through April 20 of 21. Normally, you're entitled to a free copy of your credit report through this website once a year from each bureau, but during this next time frame, they are offering it to you on a weekly basis at no cost. At this time, I would like to introduce our speaker for today's meeting, Michael Fratantoni. Michael is MBA's Chief Economist and Senior Vice President of Research and Industry Technology. In this role, he is responsible for overseeing MBA's industry surveys, benchmarking studies, economic and mortgage origination forecast, industry technology efforts, and policy development research for both single-family and commercial multifamily markets. Additionally, he is president and member of the board of directors of MISMO and serves on the CSP's Industry Advisory Group and the membership committee of MERS. Prior to joining MBA, Michael worked in the industry in risk management and senior economist roles at Washington Mutual and Fannie Mae. He received a PhD in economics from Johns Hopkins University and a BA in economics from the College of William and Mary, and has served as adjunct professor at the University of Washington, Johns Hopkins, George Washington, and Georgetown universities. Michael, as Matt mentioned earlier, we do appreciate you taking time out of your busy schedule to join us today and look forward to what you're having to share with us. So with that, I will now turn the program over to Michael.
David, thank you, and thanks to the Mississippi MBA. Really appreciate the opportunity to be with you here today. I'm an economist, so that means I come with charts, and so just pulled that up on the screen for you all to look along with me as I walk through our thoughts on the outlook for the year or so ahead and some of the trends that we're watching most closely in the mortgage industry. Was talking with Matt a bit before we got started that, obviously coming to talk to you this week, I think front of everyone's mind is what's going on with respect to the election and what that could possibly mean for the outlook. I guess for better or worse, we had baked in to this forecast, which we released at our annual convention in October, something close to the result that we got. So at least today at this hour, it looks like it's more likely that we're going to have a President Biden and more likely that we're going to retain a Republican majority in the Senate. And we're going to have the Democrats with a narrower majority in the House. So in many ways, it's going to be a environment where it's going to be more difficult for legislation of any kind to pass. And from a business person's standpoint, that likely means more stability. So I think that's probably a preferred outcome for most mortgage lenders out there. The second implication of that result, and here I'd compare it to what had been talked about a fair amount, the possibility of a blue wave where you would have a Democrat president, control of the Senate and control of the House, which could have led to much higher levels of spending, which I think would have translated to larger budget deficits and higher mortgage rates, which is generally not a good outcome for our industry. It also would have led to the appointment of probably some more left-leaning heads of regulatory agencies and cabinet departments, where I think, given the control of Congress, the way it's likely headed right now, you're probably going to have more centrist nominees because that's who's going to be able to get through a Republican Senate, which is going to be required most likely. Again, I think overall that's going to be more positive for our industry, housing, mortgage markets, and all of our participants, because I think it's likely to lead to a more stable environment. So that with the political background, let's talk about the economics, which is what you hired me for this conversation. So in terms of the growth outlook, obviously 2020 was an unbelievable year, sharp drop in activity due to the pandemic. We're seeing the rebound now, expect that growth is going to continue at a faster than normal pace in 2021. Getting a little more tangible, going into this year, and as of February, we had an unemployment rate of 3.5%, which is the lowest it had been in 50 years. Then the pandemic hit, the lockdowns, we peaked at 14.7% in April. It's come down, it was 7.9% in September. We think it'll be about 7.5% by the end of this year, about 6% by next year. So an environment that's improving, but still not back to normal. And we think, and the Fed has confirmed that in that kind of an environment, they're going to keep short-term rates essentially at zero for years. So we're showing here through 2022, short-term rates aren't going anywhere. We do expect that longer-term rates like 10-year treasuries or 30-year mortgage rates are going to inch up from where they are now. So the Freddie Mac rate out this morning, 2.78% on the 30-year fixed, new record low. We think we'll be closer to 3.5% by the end of next year. So, what would have been a record low until this year, but just somewhat higher. So that's the big picture outlook. Definitely wanted to sort of bring home a little bit and compare what we're seeing nationally to what's happening in Mississippi. So first looking at total employment. So you got the dashed black line for the United States, and then I guess that's sort of an orange line for Mississippi. Generally tracking pretty similarly in terms of that unbelievably sharp drop in employment as we went into March and April of this year. But, what looked initially like a V-shaped recovery in employment, now becoming more of a swoosh, and you can call it a Nike swoosh or some other kind of a swoosh. But generally what it means is those first couple of months through the summer, that recovery was rapid and very, very sharp. But now it seems to be slowing somewhat. And if you look at the unemployment rate, it's a similar pattern where we hit that spike at its high point in April. That's the highest unemployment rate we've seen since the 1930s, whether you look nationally or for Mississippi, and has come down significantly. It's interesting that both on the employment and the unemployment side, that Mississippi looks like it's doing better than the United States as a whole. So definitely a positive. And yet we're not back to normal. And sort of why not? And if you think about how this pandemic downturn has impacted the economy, it's been far from uniform, right? So folks like us, I think, have the benefit of working jobs that are amenable to remote work. And as David was saying, as frustrating as it is to be yet again staring at a screen as opposed to being in a room with you people, there are jobs that it just doesn't work as well. So the entire travel, leisure, and hospitality sector severely impacted and just not coming back the same way as the rest of the economy. And if that persists, we are seeing a pickup in commercial bankruptcies, in retail, in restaurants, bars, other places, again, difficult to do remotely. Those workers will get rehired in other portions of the economy, but it just takes a lot longer. Someone who is temporarily furloughed from a job and called back, that's a pretty quick process. Someone who has to look at a whole new industry to get rehired, that could be several months to longer to find a new spot. So that's what's going to keep us from being a full V-shaped recovery and more of this swoosh. But I think this picture really highlights just how different this downturn is from the last one. So in the great financial crisis, where obviously housing and mortgage were sort of front and center, and you had the banking system hit so hard that credit for most of the economy dried up. For years afterwards, the economy was struggling to grow. And you see the peak of that mountain in 2009, 2010, at its worst, you had more than 6 unemployed individuals for every job opening in the economy. And that only came down very, very slowly over the next decade because so many sectors were hurting, they were slow to hire. But if you look on the right, yes, we had this spike back in March and April, but now we're down to a situation where there are only 2.1 unemployed individuals for every job opening. That's certainly worse than the less than 1 in February this year. But it points to the fact that there are abundant job openings in certain sectors of the economy, not least our own, right? I mean, if you look at the number of openings out there for various back office jobs, processors, underwriters, closers, and certainly expect that on the servicing side of the business, as folks are coming out of forbearance, there's going to be a need for more workers there. So just an example of a sector, which happens to be ours, that is hiring like crazy, or would like to, tons of job openings, but you might not have the folks with the right set of skills to just walk right into those jobs. But the fact that this relationship has come down so quickly, I think, points again to how different this downturn has been from the prior one. Now, central bank focus, they're looking at the job market, they're looking at inflation. Inflation is very low right now, but our forecast is that it is going to pick up over the next couple of years. We don't expect any real galloping inflation. That would have been a risk with a blue wave, with a Congress that was spending much more than I think this Congress is likely to do. But we still expect inflation to rise over the next couple of years. Again, not least because the Fed has said they want it to rise. In the Fed chairman's speech in August, they have changed their whole framework for how they think about inflation. So for much of the past couple of decades, they have explicitly targeted an inflation rate of 2%, which markets have interpreted as the Fed does not want inflation to get above 2%. Now they've introduced a concept called flexible average inflation targeting, which means not only are they going to allow inflation to go above 2%, they want it to go above 2% for a period of time to try to sort of stoke the fire underneath the job market and get the recovery going even faster. So while the Fed is going to keep rates lower for longer, and while we think there is going to be some upward pressure on rates as a result of the improving job market, I think it's really this picture that you have to have in mind with respect to where rates are likely headed from here. So on the left side of the page, this is the federal budget deficit as a share of GDP. Prior to this crisis, it was 4%. It jumped to more than 16%, and it's still going to be well above normal in fiscal 2021. If you look at total debt to GDP in the United States, we're above 100%. We haven't been there since World War II, right? So the debt relative to national income has not been this high since the 1940s. Following World War II, the Fed monetized a huge portion of that debt, essentially inflated it away by allowing inflation to run higher than normal for several years. So certainly a chance that could happen again. If you look on the right side of this page, the other aspect of the financial situation is it's not just the US. Every country in the world is running large deficits right now to try to support their economy through this pandemic. We have a lot of competitors out there when we're trying to sell trillions of dollars worth of treasury securities. And that's what has us thinking that while the blue here, the Fed funds target, we think is going to be at 0 through 2022, we expect 10-year treasury rates to rise somewhat over the next couple of years and mortgage rates to rise somewhat less. So as I showed in that first page, where we think in 2020, we're going to average about 3% for a fixed 30-year fixed mortgage. We'll get closer to 3.5 by the end of 2021. So certainly not a high mortgage rate, but higher than we are today. What does all that mean for volume? So this is certainly where people sort of tune in a bit in terms of our forecast and what our members are looking to the MBA to produce. So 2020, a phenomenal year. We still think it was the second highest level ever. So 3.2 trillion by the end of the day. The only one higher was in 2003 where we hit 3.8. But you saw Black Knight and Fannie Mae out there thinking that 2020 may actually even be higher than 2003. We're gonna keep sharpening our pencil and seeing what we see. But for right now, we think it's still the second highest. And that's been driven by just this enormous refi wave, almost 1.8 trillion, and very strong purchase market at 1.4 trillion. We think next year is also going to be a very strong year at about 2.5 trillion, with the purchase market growing by about 8% to a new record high of 1.54 trillion. But we think that even with a modest increase in mortgage rates, such as I mentioned, that refi volume, particularly in the second half of 2021, is likely to fall. So we're showing it here at 946 billion. So again, about what we did in 2019 for refi, but less than this phenomenal wave that we had in 2020. And as you go to 2022 and 2023, we expect the purchase market's going to continue to grow, largely pushed along by very favorable demographics. This large millennial cohort reaching peak first-time homebuyer age, but do think refi is going to continue to fall off a bit to a point where it's primarily cash outs. So focusing in on the purchase market, this is looking at weekly application survey data that we put out. Each color represents a different year. So black is 2020. And just look at how that compares to the red, which is 2019. So early part of the year, purchase volume was running about 10% ahead of 2019. During the worst of the pandemic, that bottom of the V there, it was 35% behind 2019 on a weekly basis. But for much of the rest of the year, we're running about 20% ahead of 2019 volume. So just a phenomenally strong purchase market year coupled with this enormous refinance wave. And if you think about that purchase market, being moved along by a very strong new home market and a very robust existing market. On the new home side, single family starts are now above 1 million. You can see that V-shaped recovery both in single family starts and the HMI, which is the housing market index, a measure of builder confidence. And you can see that's anticipating even faster growth in starts. And we need it. We need additional new construction. If you look here, the solid areas are existing and new home sales. Existing home sales in September at a 6.6 million seasonally adjusted annualized rate, the fastest pace of existing home sales since 2006. And new home sales running at a more than 1 million seasonally adjusted annual rate. Again, very robust level. So the transaction volumes there, the demand is there, but look at those two lines, which are the level of inventory in the market in terms of months supply. We only have about 3.5 months of new home supply on the market, and we have 2.7 months of existing homes. Typically, we'd have about 6 months. So you see this across the country, just a lack of homes for interested buyers. And when a home comes on the market, it's sold in days or weeks, some cases faster than that, and you got bidding wars springing up all over. So just a real supply constraint on the market. And if builders don't pick up the pace, that's going to be an issue as we get into 2021 of both not enough homes on the market, and then also home prices running ahead of income. So this is looking at the FHFA home price index. We were on pace for sort of a 4 to 4.5% home price growth for 2020. But the most recent reading from FHFA as of August, nationally, home prices were going up at an 8% rate. And if you look at the realtor data, the median price for an existing home was up 14% on a year-over-year basis. So again, those bidding wars I talked about really pushing home prices up much faster than can be sustained given the growth in incomes. We do think builders are going to respond, continue to increase that pace of construction, so you'll get some additional units. And we think by next spring, many existing owners, if they see some additional inventory coming on, some things for them to choose from to move up to, they might start to release some of that entry-level inventory, which is so key for those first-time buyers. We think all in, there'll be some additional inventory next spring, next year. So our forecast here that we're showing would have the rate of home price increase slowing. Home prices still going up, but not quite as fast as this year. So focusing in on Mississippi, seems like a very similar story here. So that most recent read on a year-over-year basis, Mississippi home prices up 6.3%, actually growing faster than what we're seeing nationally. And my anticipation is that you guys have a good mix of new and existing homes coming on the market. But we're again just seeing that lack of inventory feeding right through to faster home price growth in your market as well as nationally. And expect, again, this is going to be challenging affordability, particularly for first-time home buyers as we get into the spring home buying season next year. So last few slides, I'm going to transition over to more of a lender focus. First, you all know that this year not only has been a strong volume year, but also seeing strong profitability for a lot of lenders. So this is looking at a net production income margin, and regardless of whether it's a large bank, large independent, mid-sized bank, mid-sized independent, everyone's doing well in this environment in terms of production, both in terms of volume and margin. The biggest challenges are really capacity constraints. and both operating and financial. So the left side of the page are looking at turn times on refinances. This is from a group of larger lenders that we have as part of our peer group roundtable program. Just a thing to highlight here, a third of these lenders are saying it's taken them more than 80 days apt to close for a refi in this environment. So don't get the best sort of customer satisfaction numbers when it's taken more than 3 months to close a refi, but it's a real constraint just given the challenges of hiring additional back office personnel in this environment. Then you look at the right side of the page, sort of financial constraints. This is from our warehouse lender survey. Warehouse lenders operating at 66% of capacity, which is the highest we've seen in our data, and more independent mortgage bankers having to develop additional warehouse relationships in order to get the financial capacity they need to do the lending that they're involved in. Last couple of thoughts on the servicing side. This is our national delinquency survey data. So this is the most recent data point is as of the second quarter. Our third quarter data will be out here in a week or so. A real spike in delinquency rates at the time when the unemployment rate was spiking. Wouldn't be surprised if the third quarter number came down a bit. These are people that did not make their payment. That's sort of regardless of whether they were in forbearance or not. Show you forbearance numbers on the next page. But I think this is representing the magnitude of the challenge. On the conventional side, not as high as we had in 09 and 010. But on the FHA side, that's a record high delinquency rate at 15.6%. Now you look at Mississippi numbers on the left side showing 30-day delinquencies compared to the US. Mississippi has traditionally had that 30-day rate a little higher than the national average, and that's continued, although in the second quarter actually looking better in terms of the trend in the US. And the right side of the page, looking at 90+ delinquencies, and that's where you saw that spike in the second quarter. As I said, anticipating that third quarter is going to be somewhat better. So finishing off with these forbearance numbers. So with the CARES Act that was passed this spring, borrowers with a federally backed mortgage can get up to 12 months of forbearance, and borrowers outside of that have been getting forbearance. I'm showing here across the entire market. This is a survey we do on a weekly basis. Prior to this crisis, about 25 basis points of the market was in forbearance due to natural disasters. In June of this year, that peaked at 8.5%. So about 4.5 million households across the country in forbearance. A good number of those were still paying, even though they were in forbearance. And that forbearance share has since come down to about 5.8%, 3.6% for Fannie Freddie, about 8.1% for Ginnie Mae loans. So I think a big challenge for the industry on the servicing side over the next 6 months is sort of cleanly moving these borrowers from forbearance into a post-forbearance plan. In many cases, that'll be a deferral plan where the forborne amount is put at the end of the loan, but also some modifications are being done. And then honestly, we're seeing a good number of borrowers exit current or reinstate or paying off their loan through a home sale or a refinance. So walk through a good bit of material here and covered a lot of ground, but I think overall from a production standpoint, again, expect that 2020 is going to go down as one of those banner years in your career of just tremendous amount of volume done under great terms. Expect a $2.5 trillion market next year, a growing purchase market growing to a record level of purchase volume, refi falling off a bit with just somewhat higher mortgage rates. And then, I think the challenge in the housing market is getting enough inventory to meet the demand and also to offset some of the affordability challenges that the more rapid home price increases are posing to some potential, particularly first-time buyers. So Matt, let me turn it to you, see if there are any questions or comments.
Well, Michael, so we were talking before we started, 2020 is a year that you just have to find something positive.
Right.
And it's really, it's really encouraging that the data and the points that you brought up about, obviously we all kind of knew that refis were going to drop off next year, but the predictions and the outlook for the next couple of years, I think that brings, well, I know it brings confidence to me, and I'm sure I speak for a lot of our members, audience that are watching today, that is really hopeful and really good news. And again, in a year where we will take any news, any good news that we can, we're going to take it. So thank you for bringing that out. Again, I really was not expecting that, and I'm very happy.
Excellent.
So is my wife, probably, as soon as I tell. I do have a couple of questions for you. Kind of, at the beginning, we were talking about the election. What are the predictions of other global markets right now, or how are other global markets handling the not having an outcome of the election?
It's a good question. So there was a point late last week and then Monday of this week where, again, sort of anticipation of a blue wave, which would have led to much more, much larger deficits, much more sales of debt. And it pushed the 10-year up to 95 basis points at one point, just in anticipation of those larger deficits. Once this realization for the election came through, that dropped about 20 basis points. So we're back to 75 or so. And obviously tight connection there between 10-year treasuries and what's happening in mortgage rates. So I think that's the main impact is sort of those expectations of what's going to happen to U.S. Treasury borrowing needs. So I think we're on this path closer to what had been our baseline prediction of slowly rising longer term rates as opposed to a quicker spike.
Also, you mentioned about inventory, and that's something that I think all the state of Mississippi is dealing with right now. I know that we've had in certain price points that they're go on the market and they will have 5 or 6 contracts within the first 5 hours. I mean, literally buying houses just by FaceTiming. However this election goes, do we see or are forecasting any type of credit freeze or credit restrictions from banks for the builders?
I don't think so. I think this is actually one where on a bipartisan basis, there's an understanding that, we've got too many constraints in front of builders right now. And, on the one side, there are now, artificial constraints on getting lumber from Canada due to these tariffs. And I think, if you get election going one way, maybe we'll make more progress there. On the other side, I think some of the state and local zoning regulations or, state, local, federal environmental restrictions that are artificially hampering builders' ability to more quickly put up units. I'm reasonably confident we might get some relief regardless of how the election goes, because I think it really is impinging on particularly those first-time home buyers because it's pricing them out of the market. And it is so difficult to build entry-level homes in just about any market of the country just because of those additional costs that the heavy regulation imposes.
And the last question I have is, obviously we can't have somebody on from the National Mortgage Bankers Association without asking about any future predictions of the CFPB under the two outcomes of the two possible outcomes of the election.
Great question. So
yeah.
Again, if you had a blue wave, I think there was a reasonable chance that you would have had either literally Richard Cordray again, or just someone of a very similar sort of approach to regulation. And, we had been very vocal and against sort of the approach he had taken of regulation through enforcement, of essentially imposing a large fine or a penalty on a lender for something, and then the industry was supposed to have learned from that enforcement action. So the current head of the CFPB, Kathy Kraninger, I think heard that and has put some sort of guardrails in place to try to prevent that from happening again. I think if we had had a blue wave, you would have had a director who would have moved right back to a Cordray style approach. Again, I think with the Republican Senate, it's going to be tougher to confirm somebody with sort of that sensibility, you're likely to get a more centrist. So I think, there will be some regulatory activity, there will be enforcement activity, but hopeful it won't be really as punitive as it was in that Corday era.
Gotcha. Well, Michael, again, on behalf of the whole organization, I know this was a crazy week for you, but we are so appreciative of your time that you took. This information, again, was hope. I mean, it's brought a lot of hope for the next couple of years. Again, 2020, we'll take any type of good news, hope that we can get out there, and definitely your presentation and the news that you brought to us brought that. So on behalf of the whole Mississippi Mortgage Bankers Association, we'd like to thank you for your time. Again, we know how precious it is, especially this week. And also, we will be sending you a little something from some of our famous artists around Mississippi, our mustard seed, which is a little token of our appreciation. They are a special group to the Mortgage Bankers Heart, and they have done some special pieces just for us, and we are glad that we'll be able to send you some as a token of our appreciation.
Thank you so much. Really good talking with you this morning.
Thank you, Michael. You have a great day.
All right, bye.
Well, I am very, very impressed with everything and very hopeful of the next couple of years. I really was not expecting that. I was not expecting that good of an outlook. So again, that makes me happy and hopeful that 2021 is definitely on track to be a better year than 2020. At this time, again, I want to thank David at Acronet for being our speaker sponsor. David, you've always been a great friend to the organization and a great affiliate, and we just appreciate your friendship and your willingness to help us in sponsorship opportunities as well as any way that you can. And again, we just really appreciate you. And I think that we have a couple of raffle drawings. Caitlin?
Yes, we have two from Acronet. Our first winner is Brad Benton. That will be our first winner. Congratulations, Brad. And we have one more from Acronet. Heather is our second winner. So congratulations to both of you. And David will be in contact with you guys to get you your prizes.
Congrats, guys.
Congratulations, Brad and Heather. David, do you want to say anything else before we take a quick break?
No, I just, again, want to say thank you to the association for hosting this meeting and the opportunity to be the sponsor for Michael today, and always glad to support the association in any way we can.
Thank you, David. Everyone, we're going to take a 10-minute break. It is 10:40. We're going to come back at 10:50 to start our annual membership meeting. So let's see. I'll see y'all back here in 10 minutes. Hello, and welcome back to the 2020 annual membership meeting of the Mississippi Mortgage Bankers Association. Pursuant to our bylaws, I would like to go ahead and officially call this meeting to order. The first part of the agenda is I would like to thank all of our sponsors for today that has helped us out to get this meeting together. You know, again, it's a unique experience being able to do this all by Zoom and virtual. And I hate that we're not all together, but in person, but I'd rather everyone be safe and healthy as opposed to being where we meet together and something might unfortunately happen. So again, however we're all joined together, it's always nice to come together as an organization. Again, I want to mention Confluent Strategies and thank them for being an affiliate, being a awesome sponsor, and just being a great friend to our organization. We have Lydia Lassiter with us and Jim Dunley, and I'm going to turn it over to them for them to say a few words.
Thank you, Matt. Hello, everyone. I am Lydia Laster, Senior Relationship Manager with Confluent Strategies, a sales agent of Equifax. I want to thank the Mississippi MBA and the opportunity to be a sponsor today. I'd also like to introduce to you Jim Dudney. He is our newest mortgage sales exec who has recently joined our Confluent team.
Well, thank you, Lydia, and thank you, everyone. So like Lydia said, I joined the Confluent Strategies team just a few months ago after around 10 plus years in the fintech industry. So I happen to be over here On the mortgage side, so listening to Michael's presentation, obviously 2020, you have been slammed, and it sounds like that may be the case going forward, hopefully in maybe some different circumstances health-wise, but hopefully we'll stay busy. So I did want to make sure that you knew that Confluent could help with a variety of mortgage solutions, not only your ham and egg tri-merge report. So in addition to the tri-merge report, we have all kinds of solutions you could take advantage of, such as our verification services, which could include the work number or day one certainty, just an easier way for employment and income verification to come across, as well as reducing paperwork. You have our undisclosed debt monitoring tool that runs in the background. That way you would have no surprises before closing with any of your customers. Our credit expert suite with a what if simulator or the Wayfinder tools can simulate situations, also just give you custom plans to increase scores. And finally, the Equifax IntelliMerge product. So it can start with a single report, and then any additional reports are only added or not added based on your criteria. So that could be credit score ranges. It could be the presence of derogatory info shows up, debt to income ratios, etc. So just a few things that we have to offer there, but I'd love the opportunity to review your current strategy and see if we can offer any efficiencies and or other solutions to your process. But just feel to reach out to myself or Lydia here on the mortgage team at Confluent. We'd be glad to help you out, and I certainly appreciate it.
Well, Lydia and Jim, thank you so much again for sponsoring today's meeting. And again, just being a awesome and awesome affiliate of our organization, and again, a friend. And I think y'all are gracious enough to do a door prize. Caitlin?
Yes, so we got another door prize here from Confluent Strategies. And Wayne Jamieson will be our winner. So we'll get that information to the Confluent Strategies group, and they will send you your prize. Congratulations, Wayne.
Congrats.
Congrats, Wayne. Lydia and Jim, thank you again.
Thank you.
Thank you.
As your serving president, I get the pleasure of bringing you the year in review. This year can be described in so many ways, and it's easy to find the negative and the bad in this year. However, I am very proud to say that we as an organization, we have decided to keep the momentum going, hold true to our values, and simply get it done. Instead of finding the negative, we found the positive. Even with navigating through the challenges of COVID-19, guideline changes, I'm sure I'm not the only LO that feels like every single client is a self-employed borrower, and record-breaking production, I'm proud to say that we have made the absolute most of this year and would consider it a success. Here are a few items that I would like to bring to your attention and address. Finances. As you're about to hear from Macy Carney, our treasurer, our organization is financially strong. We were not able to have two of our biggest revenue events, the Great River Conference and the State Conference this year, but the goal of the entire board was to be the stewards of, be good stewards of the rainy day fund. And we did. Even with the revenue limitations for this year, we were still able to present two $1,500 scholarships to high school seniors of members, sponsored two members for the School of Mortgage Banking, donate $5,000 to Habitat for Humanity, and we will be participating in a build day soon. And today we'll be choosing two charities to donate $2,500 each to. Even with all the obstacles of 2020, it has been nice to still be able to accomplish this. Speakers and information. I hope everyone has been excited and pleased with the speakers this year. We have really tried to bring the meat and potatoes to help us navigate through the changes of this year. I would like to thank our affiliates. Our affiliates have come through tremendously with providing us their speakers to come in and to make the most of this year and to just help us navigate through the changes. I want to thank everyone that provided, thank the members who took time to join the meetings and watch, and also watch the playbacks. I also thought it was nice this year that we had so many of our meetings that our referral partners could join and watch in with us. I hope we were able to bring content that was useful to everyone in the industry. This year is not over yet, and the board still has work to do. The board will be having a retreat to see how we can make our organization even better. If you have any suggestions, please contact myself or Caitlin. Also, in the next couple of weeks, we should be getting some exciting news about the 2021 Great River Conference. So 2021 is already looking like a great year. On behalf of the board, I would like to thank all of you for your support, your participation, and most importantly, your friendship. There truly is no organization like the Mississippi Mortgage Bankers Association. I was going back and forth whether I was going to address this next topic or say this next bit, but it's been on my heart. So this year has been tough on everybody. We can take a look for all the positives all day, but it's just been a tough year and a lot of us are tired. Some of us have experienced loss this year. Some of us have experienced additions to our family, which is great. Some of us have experienced burnout. And some of us, like myself, have experienced all of it. And sitting on this side of the organization, being able to see it as a whole, this organization is special. When it comes to a member needing something, we're the first one there for that member. Because that person's not a member, they are truly friends. We're there to support, whether it's good times or bad times. We are there to be a shoulder to cry on, to be an ear to vent to, whatever. We will always be there. Like I said so many times, we are a organization of competitors, but we are more friends than anything. And for that, I am blessed to be part of this organization, and it means so much to me. So with that, that is your year-end review. 2020 is getting closer to being in the rearview mirror, and we are looking forward to a productive, fun 2021. If anyone has any questions, I'm now going to open the floor up to any new or old business as well as questions. You can use the chat bar, the chat section, or you can email Caitlin or myself directly. And at this time, I'll also like to thank another amazing sponsor of ours, First Community Mortgage, and Lisa. Lisa.
Can you hear me?
Yes, ma'am, we can.
Beautiful. I too want to thank the organization, the Mississippi Mortgage Bankers Association, and Maura Phillips from MGIC, who asked me to be a sponsor, and I thankfully was. What a great topic to be listening to this morning on the future of the mortgage bankers for next year. So that I think our future looks bright, just like everyone else has mentioned, and I'm excited about that. Some of you may or may not know me. I was a rep for US Bank for about 10 years. And just last spring, I joined First Community Mortgage. Completely different types of correspondent lending, going from very large to a small, much smaller company. And there's advantages to both. But one thing I can tell you all about First Community Mortgage, we're a correspondent investor. We do delegated, we do non-delegated. And we kind of focus on three main pillars for our customers. One, competitive pricing, underwriting, and then ease of purchasing loans. And I guess every rep will kind of say the same thing. You know, we're great to work with, all that kind of stuff. But we have client managers. We have one point of contact that I think is our kind of claim to fame for the process from beginning to end. So you always know who you're going to go to, any questions that you may have. So that's been very successful for us. And I love working for First Community Mortgage. It's truly partnership driven. We are never going to be a huge investor. And we kind of play more towards customers who are those smaller community banks, smaller correspondent lenders. So I'm excited to be here. We do, you know, like everyone else right now. Matt, as you mentioned, I think every borrower is self-employed right now, which contributes to extended turn times for everyone. But we do
very happy
jumbos.
underwriters. bankers.
We do jumbos. I think we're one of the first investors that came back offering the 80% cash outs, and that has been very positive for us as well. So anyone interested in, I know it's a tough time to take I would love to say 10 minutes to fill out an application package, or to give me a call about being a partner when it's so crazy busy. But if anyone ever needs an outlet like First Community Mortgage, I would love to chat with you and show you what we all have to offer. So again, thanks for letting me be part of this. It's been very insightful. And it is the new way of kind of doing business these days. So I'm glad I got to see some of my friends via this video conference.
Well, Lisa, again, thank you so much for sponsoring today's meeting. And I also hear that you have a door prize as well.
Sure do.
Awesome. Caitlin?
Greg Schaus is the next winner. So we will get your contact information to Lisa, and you'll be receiving a prize from First Community Mortgage.
Now I have the honor of introducing our Mortgage Bankers of Mississippi Vice President. Someone I told today, she just has the most contagious smile ever. Someone that I've enjoyed working with for this past year. And I turn it over to Miss Sheila Thomas.
Thank you, Matt. Okay, great. As this unusual year comes to a close, we are now focused on the goals we want to accomplish for 2021. One of our goals for the upcoming year is to reestablish a Northern Mississippi chapter. So we are looking for individuals who are willing to take on leadership roles in that area. If you are aware of anyone that you think can make a good leader and assist in reestablishing a chapter in Northern Mississippi, please notify any board member and we will take it from there. Next, we are looking to improve member engagement and add value for our members and affiliates. We are all extremely busy right now, so we want to make sure that we are providing speakers and topics that are proactively address industry trends as well as guidelines and regulation changes, but are also fun and interesting. If there are any topics or speakers that you would like to see presented, please let us know. And an ongoing goal every year is to increase MBA of Mississippi membership. Currently, we have 18 regular members, 12 affiliate members, and 1 government affiliate. We challenge all members to recruit a new member and/or affiliate in 2021. We would also like to increase the Mississippi presence at the Great River MBA Conference in 2021 and going forward. In 2019, we had 65 MBA of Mississippi members attend the Great River Conference out of 605 total attendees. And although it was canceled this year due to COVID, we had only 54 members registered to attend out of 475 registered attendees. So Mississippi comprised roughly 11% of registered attendees for the last 2 years. We would like to increase our Great River Conference presence percentage to about 20 to 25 of total attendees in 2021. And finally, if there are any ideas from the membership, any suggestions for meeting topics and speakers, please enter them in the chat box below of the screen. Next, we would like to thank our meeting sponsor, MGIC, and Mara Phillips. Take it away, Mara.
Hello, everyone, and thank you, Sheila. So good to be with y'all today and see all those great faces on the screen. I was thinking as everyone was talking about how long I've been involved in Mortgage Bankers and realized that I had been a member since the late 1980s, which is hard to fathom, and actually have been on the board since about 1994 or so. That's a crazy long time, but I've enjoyed every minute of it. Can't imagine being in this industry without having gotten to interact with all of you when I wouldn't necessarily have otherwise done so. One thing I wanted to mention to y'all, not something specific, but just one of the things I pride myself on being an MI rep is my responsiveness to you and you being able to reach me when you need me, because I certainly don't want to be able to hold up your transaction. And having done what most of y'all do, I understand timing is so important on deals. So unfortunately, not being able to travel and being here at home, I'm even more responsive than ever. So always feel free to reach out to me if I can help you brainstorm on a deal or a transaction and restructure it for you. I'm happy to do that. I believe you all have my cell phone number and my email. My cell phone is 601-594-1860. My email is Mara_Phillips@mgsu.com. So give me a call. I'd love to chat with you. Thank you.
Again, thank you, Mara, and for sponsoring and being such a great affiliate for MBA of Mississippi. I think you also have a door prize.
Yes, I do.
All right, our winner for the MGIC door prize is Kristie Goings. So we will reach out to you and get your information and get that tomorrow. Congratulations.
Okay, thanks again, Mara. And up next is MBA of Mississippi Treasurer, Macy Carney.
I forgot I was on mute. Sorry, guys. Good morning. I'm going to throw a couple of numbers at you guys. Matt took a little of my thunder away and told you guys some stuff already, which is great. That's less time for you to hear me talk. Just want to go over year-to-date stuff. And I'll also mention before I get into it, if you want to ever view the full financial report, bank statements and all that, you can contact Matt for that information, or contact Caitlin with Confluent Strategies, and they can get that information to you. So year to date, our total assets are $89,763 and some change. That breaks down to a current checking amount of $5,275 and our money market account that has $84,487. As Matt mentioned, we've given a couple of scholarships away, 2 scholarships at $1,500. One of the biggest things we looked at that we had happen this year is we normally give seed money to the Great River, and the amount this year it was going to be $15,000. So we actually paid that, and then they canceled it, and so we were refunded that money. So we currently still have that amount in our, I believe we moved it to the money market. Probably nobody on the outside knows all of this, but those of us that are on the board have worked, specifically past treasurers. I want to throw a shout out to Jean and other members over the past couple of years, have worked with members who maybe owed a little money or anything like that. Guys, it started with like a 7-page list of people, and I'm not throwing anybody under the bus here, but I just want you to know over the past few years, probably the past 4 years, with past treasurers and other board members working so hard, I think that list is down to like a half page now, which is really cool and great news for our organization, because that's less things we're having to worry with. And then again, Matt already mentioned it, but I just want to say, although we did see a loss in revenue due to the Great River Conference being canceled, the Mississippi Mortgage Bankers Association, is still in really good financial standing. So again, if you have any questions or would like to see any more of that information, contact Matt or Caitlin. And moving forward, I would like to thank another meeting sponsor, which is Mutual of Omaha. And I'm going to give the screen to Sherry Crook. Thank you so much for being a sponsor.
Hello all. Mutual of Omaha Reverse Mortgage is here to help all homeowners over the age of 62 financially prepare for their retirement years. You may not know this or remember it, but reverse mortgages, 99% of them, 99.9 these days, is an FHA insured home loan. It is a home equity conversion mortgage. That's what FHA calls it. And it was signed into law by President Ronald Reagan, February 5th, 1988. And there's been like 1.3 million reverse mortgages that have been executed since then. Fabulous loan program. Can be used to supplement monthly cash flow, eliminate existing mortgage payments, pay for improvements to remodel, helps cash flow, medical bills, future expenses. People have helped family members, gone on vacation, whatever you choose. And it's not for poor people. It's for the folks that have worked really hard during their life, built up equity, they're retiring, and it's one more bucket of money that they can use to make choices when the market is down. I sent the video, I don't know if you had a chance to see it, that mortgage bankers would have sent out, I think Friday, that shows sometimes it's a better idea to use a reverse mortgage than to cash in money, extra money in a IRA or 401k, taking funds you shouldn't. But anyway, great option. Hope you'll give me a call. Look forward to being part of mortgage bankers in the future with open meetings. Miss everyone. Good to see y'all.
Thank you, Sherry. We really appreciate you sponsoring it. Caitlin?
And our next winner for the Mutual of Omaha door prize is Anjali Nolan. So we will get your information and send that out to you. Congratulations.
The next section of our meeting is the anticipated awards and recognition. This year, I first get to start off with recognizing our past president, Brad Benton. I feel like any new president should always have the ability to serve in that role for a few months so they can truly appreciate everything that the past president did. But Brad, under your leadership, we were able to get the Hattiesburg chapter, Pine Belt chapter back up and running. We were able to get the coast up and running. You, along with the rest of the board, we were able to implement some really good programs that have just made our organization that much more efficient to our members, to the whole real estate industry in the state of Mississippi, and just overall just made us that much stronger. And we are very appreciative. We know that, we all know that being part of the, being a president does take up a considerable amount of time. And we just really, truly appreciate your dedication to giving your time as president. And we have a plaque in the mail on its way to you. And again, thank you for everything that you did. Now I would like to introduce Ms. Macy Carney again to award this year's Affiliate of the Year.
All right, guys. So I first want to read the description of what the Affiliate of the Year award is intended for. And it's intended to recognize the affiliate that has gone above and beyond in the previous year in serving our industry through partnerships, training, sponsorships, and involvement with the state and local chapters. The purpose of this award is to recognize the one MBA member whose contributions to the association, the real estate finance industry, and the community have made a positive difference. I will tell you once this is announced in just 2 seconds when I finish, you will say, oh my gosh, this is the perfect choice, because this year's Affiliate of the Year award goes to Mara Phillips with MGIC. Congratulations.
Oh, thank you. Wow.
Congratulations.
Thanks so much. Appreciate that very much.
Well deserved. We appreciate you so much for everything that you do.
Thank you.
Now I get to introduce last year's, and I forgot to apologize, Macy and Mississippi Home Court was last year's Affiliate of the Year. Now I get to introduce Ms. Jean Gross with to award the Lifetime Achievement Award. Jean was last year's recipient of the award. Ms. Jean?
Thank you, Matt. I'm unmuted. Okay, I get to introduce someone that actually got me involved 20 years ago in mortgage bankers. Although I started attending in the 90s, I actually got involved in early 2000. And so this person, as an association, we're so fortunate to have many outstanding mortgage professionals among our membership. But recognizing that our strength comes from having committed and contributing members, the Mortgage Bankers Association of Mississippi has established the Lifetime Achievement Award. The purpose of this award is to recognize the one MBA member whose contributions to the association The real estate financial industry and the community have made a positive difference. And so this year's Lifetime Achievement Award goes to someone that I know personally has done that, and that's Felicia Ford with Trustmark National Bank. Congrats, Felicia.
Congratulations, Felicia. Very good.
Congrats.
Thanks, everyone. Oh, I am so surprised, and I thank you all so very much for thinking of me for this award.
Absolutely, Felicia.
Well, this year I get the privilege of announcing the recipient of the Mortgage Banker of the Year Award. This year's recipient of the Mortgage Bankers Award is someone that has proven time and time again of their ability of being a motivated leader. We as an organization are very appreciative of their diligence, enthusiasm, and always willingness to help. In my opinion, this year's recipient has set the benchmark to new heights for future recipients. On behalf of the entire organization, I would like to express our gratitude for all that you do for the Mississippi Mortgage Bankers of the Year, Mississippi Mortgage Bankers Association. To the 2020 Member of the Year, Ms. Sheila Thomas. Thank you. Congratulations, Sheila.
Yay.
Congrats.
Oh, thank you. Thank you. I am so appreciative.
Congratulations to all.
I am so humbled. Thank you.
Well, congratulations, Sheila. And congratulations to all of our recipients. Again, y'all truly do make this organization a much better organization. And Macy, I'm going to turn it back over to you as one of our sponsors for this meeting.
Thanks. I'll be short and sweet. I appreciate everything that you guys do for MHC. I know that just about every single lender on the call uses our programs, and I'm very grateful for that. I hope you have had really good experiences, even with COVID. I have heard pretty much zero negative feedback. Our single family department is crushing it every single day, and I think they are going above and beyond. And I'm so happy that we can all work together. Again, I always mention if you need material, I can get that out to you. We can personalize it. All of it is free. I can even send you some swag if you want to give that out too. I always have enough of that. So again, just thank you so much for supporting Mississippi Home Corporation and our cause. Appreciate it.
Thank you, Macy, for always sponsoring me and such a valuable asset to our organization. Okay.
And Melissa West is our next winner. So we will be getting the door prize out to you. Congratulations.
Congratulations, Melissa. At this time, I would like to acknowledge the 2018 and 2020 board members that will be rolling off the board and thank them for their service. Again, it's one of those things that this board could not, this organization could not be as strong and as affluent as we are without people who volunteer their time and their skills and their services. So I would like to thank all of the 2018-2020 board. I would like to thank Ernie Wade, Vicki Graves, and Michelle Dugan for their service as they will be rolling off. Thank you guys so much for your time and services and your expertise that you brought to the board for the past 2 years. It was truly appreciated. And again, thank you. I would also like to take this time to introduce the 2020 to 2022 board. Matt Wilson, President. Sheila Thomas, Vice President. Secretary, Ms. Jean Gross. Treasurer, Macy Carney. Past President, Brad Benton. Gulf Coast First Officer, Ginger Felton. Gulf Coast Second Officer, Grace Russell. Jackson First Officer, Mara Phillips. Jackson Second Officer, Julie White. Pine Belt First Officer, Owen Mutton. Pine Belt Second Officer, Tammy Geis. Directors, Commercial Banks, Felicia Ford. Affiliate members, Brandy Renfro. Mortgage Bankers, Greg Showles. Mortgage Brokers, Valerie Gale. It's simply been a pleasure serving with you. I am very excited about our next year as well. And I want to thank everyone that serves on the board for your time, your expertise, and just being willingness to do anything that we need to get done and accomplish. Thank you all. Kim with Radian was not able to make our call today, but she did send this video, and I would like to thank her for sponsoring as well. Again, Kim, thank you again. Kim with Radian, thank you again for sponsoring this meeting. And she was gracious enough again to offer a door prize. Caitlin.
Will be our last door prize of the day. And Julie Stewart is the winner. So congratulations, and Radian will be sending you a door prize.
There is one last person that this organization owes a huge, sincere thank you to. She is one that when the board meets, all 12 of us, and give her 12 different ideas, she's the one that comes back and somehow incorporates all of them together and makes it all work, keeps us on time, keeps everything just flowing so smoothly. And that is Caitlin with Confluent Strategies. Caitlin, from the bottom of my heart and the whole entire board, we want to thank you for everything that you do for us. We simply couldn't do it without you. So thank you for everything.
Thanks, Matt. I really enjoy it, and I appreciate being a part of this group with y'all.
Thank you, Caitlin.
Hey, Caitlin.
I don't see any new or old business needing to be addressed. If there is, we'll just give it another 10 or 15 seconds for you to do it. With that being said, I recognize Macy.
All right, Matt, thank you. I will make a motion to adjourn this meeting.
And I second.
All right, with a motion and a second, I officially adjourn our 2020 membership meeting. Thank you all so much for attending.